everyone, and welcome to another Elliott Wave Forecast Charts of the Day video. Today we're going to take a look at the S&P, and the Charts of the Day is a session within the website in which every day we take a look at one instrument, we show the 1 hour charts, and we explain it, how we see it, and what would be the path ahead, right? So make a habit, visit Elliott Wave Forecast every single day to look at the video, or you can even subscribe to our YouTube page here, right? And being able to receive daily videos about the market, right? We post a lot of information there for free every single day. Subscribe at Elliott Wave Forecast in YouTube and get the videos there from there, also from there, all right? So today we're going to take a look at the S&P. The S&P, guys, is very technical. The S&P it did a correction. It did a tremendous pullback as we were expecting at the end of last year, and the S&P dropped from the 4,800 handle almost 1,000 points. It dropped the S&P, but doesn't matter that it dropped 1,000 points. What matters is that is very technical, and our members they were able to get a very accurate a very accurate forecast of the path, and we never buy into this trap right here in this rally. But the S&P, the most important thing is that it reached our buying blue box area that started at 40.56 and ended at 36.95. Now the S&P, I mean, this is a weekly correction. Technically, you're correcting a cycle that started in March of 2020 and it lasts 2 years. And now the S&P, at least, it will do 3 weeks higher to the 45, 46, 47 area in the near future. But the most significant thing is the reach over here of the blue box and the reaction. And the reaction we're gonna zoom in right here in the 1 hour, and we can see how from the blue box area. But for those that doesn't know, blue boxes areas are high frequency areas, guys. Keep that in mind. The market we are trading in 2022. What happens? Computers trade. There is no way that every day the market doesn't stop for a second. Always is money in and out in the market. And these blue boxes is a system that we have developed in Elliott Wave Forecast, in which we tell members when the computers are gonna be buying, entering the market, and it works in the highest degree. And as of right now, we have seen a very nice and controlled price action from the lows in the S&P. The Elliott Wave theory say that when the market rally in 5 weeks or drop in 5 weeks, soon it will be a 3 weeks pullback, and that will mean after all that the market is gonna make at least another cycle similar in the direction of the 5 weeks. At this stage, the S&P is ending either these 5 weeks, 1, 2, 3, 4, 5, or the S&P is ending 1, 2, 3, 4, 5. Our expectation is that soon it will correct in 3 weeks, either in this degree or this degree. What is the difference between 3 weeks and 5 weeks? The difference is that the 5 week makes a 4 and the 5. And the idea of the 4 and the 5 makes an impulse. If you notice here, 5 weeks, it did 3 backs and the market rally. Right here, the market decide it's gonna do a 4 and a 5, or it's gonna drop and break these lows, and the trend continue to be lower. In other words, After 5 and 3, always come 5. After 3, the market decide if it's going to come a 4 and a 5, or the market is going to fail and trade lower. And that's where we stay now with the S&P. The S&P of the lows, the S&P has done 1, 2, 3, 4, and 5 waves. 1 in black, 2 in black. 1, 2, 3, 4, and 5 waves. That means that the S&P soon, maybe next week, is going to put back in 3 waves. But what does that mean? That means that these 5 waves right here, these 5 waves in the S&P right here is either this or if this. So the continuation should happen after 3 waves. So the message is very clear. We believe that looking at the S&P coming down right here on the coming down in 3 waves to the Ecolex blue box area and doing a reaction higher in 5 waves, that will mean that temporary, I believe, that the bulls are in control. In Elliott Wave forecast, we do not present alternative views because we believe that our members trade with security, that they don't doubt the market, right? So at this stage, what I'm saying is that for those that trade fundamentals, for those that they believe that something bigger can happen in the market, no question asked, guys. Everything is possible in the market. But as of right now, the decline is in 3 waves. Nobody knows that the market cannot do 3 waves and do another leg lower. But the 5 waves coming from here is very constructed for the bulls in the market. Another view, which is less likable, is that this is 1, this is 2, and we aim the 3 here, and the 5 waves is part of the flat. But doesn't matter. There is another instrument. If you look at the S&P, that flat structure from here, yeah, it's possible in the S&P. But that's why in Elliott Wave forecast, we look at many instruments upside. We don't base the forecast just in one instrument. We look at the series. We use cycles, correlations, and a lot of tools. And we believe that the 5 waves in the S&P, they're real, and that the S&P soon, it will put back in 3 waves, but then it would extend higher in another leg. So I hope you guys enjoy the way that we look at the market, and you guys enjoy how we explain the different type of scenarios, and subscribe. You can take right here the 14 days trial for $9.99, or you can subscribe also to our YouTube channel to receive daily videos about the market. That's all for tonight. I hope you guys enjoyed the video and see you guys around. Thank you guys so